How are you? Today I'll come with a new topic, and today's topic is a little different topic. I'm not going to deal with the syllabus. Today I'm going to deal with something different which is in our day-to-day life we see in newspapers and news channels. If you remember in my last class, when I was dealing with monetary policy, I came across different concepts of monetary policy tools, such as bank rate policy, uh, cash reserve ratio, statutory liquidity ratio. But I didn't deal with very important concepts such as repo rate and reverse repo rate. So in my today's class, we are going to understand in brief about what is repo rate and what is reverse repo rate and what is the difference between bank rate policy and repo rate policy. So these are the two things that always the Reserve Bank of India deals with. So whenever there is financial liquidity crunch or there is a huge amount of money supply in the economy, the RBI goes on for changing the repo rate, and also sometimes it goes on for changing the bank rate. So most of the time students get confused with the concepts of bank rate and repo rate. So today we'll focus completely on what is the distinction between bank rate and repo rate, and along with that we'll try to understand what is reverse repo rate. So let us move on to the slides.
Repo rate and other types of rates of RBI. Presentation by Aftab bhai. Friends, this is the website of RBI. This is the home page of RBI. So in this home page you can see there are different policy rates: repo rate, reverse repo rate, bank rate, etc. So here this is just an introduction for you to understand as to what is the topic that we are going to deal with. So we are going to deal with the different types of policy rates, that is repo rate, bank rate and reverse repo rate. So in this entire page you can see various things that is there of the Reserve Bank of India. So before understanding about the different types of rates or what is the meaning of repo rate, bank rate or reverse repo rate, let us try to understand about the banking structure. As you know, every country has a central bank, and India's central bank is Reserve Bank of India, which is also called as the apex bank. And below Reserve Bank of India comes all the other financial institutions. So scheduled commercial banks, they follow all the rules and regulations offered by Reserve Bank of India, and we the general public are in the bottom of the pyramid. We approach the commercial banks for whatever our financial needs are. So friends, when the commercial banks borrow money from Reserve Bank of India, they have to pay rate of interest. Again I am repeating, when the commercial banks borrow money from RBI, they have to pay rate of interest. This rate of interest can be called as bank rate or repo rate. What is this? Bank rate or repo rate? So let us start with, what is bank rate? Answer: bank rate is the rate at which the Reserve Bank of India rediscounts the first class bills of exchange offered by the commercial banks. So for us to understand this rediscounting of bills of exchange, I have taken an example. Let us say there are two individuals, Mr. A and Mr. B. Mr. A and Mr. B engage into a trade where Mr. A sells goods and Mr. B purchases the goods. And here, when they entered into trade, person B is purchasing the goods on credit basis. That is, he has promised to pay 1000 rupees after a month. So this is what is the trade. But person A, if he feels that urgently he needs 1000 rupees, he cannot approach person B, but he has with him a promise that the amount will be repaid by person B after a month. So person A cannot wait for a month. So what will he do? So this person A will approach any of the commercial banks along with the bill of exchange which is given by person B. So for our example, I have taken over here State Bank of India. So person A takes the bill of exchange and goes to State Bank of India, and the State Bank of India, it discounts the bill and gives 900 rupees to person A. So this is called as discounting of bills of exchange by commercial banks. So person A offers bills of exchange to State Bank of India. State Bank of India discounts the bill of exchange, and for a face value of 1000 rupees, the person A gets 900 rupees. So here 10% is the commission that has been kept by State Bank of India with itself. So here these bills have been discounted. It is called as discounting of bills of exchange. Now if you see ahead this way, State Bank of India discounts many bills of exchange which is offered by the industrialist or by the business houses, and a time comes where the commercial banks are loaded with bills of exchange, and even sometimes they face financial shortage, they face crunch of liquidity in their hands. At that time, what the commercial banks can do? So here, now what will the commercial banks do if they face shortage of funds, because they are having only the bills of exchange, because the money they have given it to the customers. So in such a situation, as you know, the commercial bank will approach the apex bank, and in our case it is the Reserve Bank of India. So the State Bank of India, along with all the bills of exchange which it has, it takes it to the Reserve Bank of India, and all these various bills of exchange, the Reserve Bank of India, what it does, again it goes on for discounting the bills of exchange which is provided by State Bank of India. So here the Reserve Bank of India will provide rupees 950 to State Bank of India. So if the bill of exchange is of rupees 1000, then RBI will give rupees 950 to commercial bank. The difference of rupees 50 or 5% is the discount rate, which is also called as bank rate. So as I told you, bank rate is the rate at which the Reserve Bank of India rediscounts the bills of exchange offered by the commercial bank. So here rediscounting, State Bank of India has already discounted it. Again Reserve Bank of India, when it discounts it, it is called as rediscounting of bills of exchange offered by State Bank of India. So at the times of inflation, the bank rate is increased. Sometimes friends, bank rate also refers to the rate of interest charged by RBI to give loans to commercial banks without any collaterals. This is to be kept in mind. Without any collaterals, if the RBI is giving loans to the banks, then also they charge bank rate. The rate of interest is called as bank rate. So there are two ways of looking at bank rate, either as discount rate or as rate of interest. Now let us go on for understanding what is repo rate. Repo rate is the rate at which the central bank of a country lends money to commercial banks in the event of any shortfall of funds. So here see here, repo rate, again I am telling you, is rate at which the central bank of country lends money to commercial banks. Even in bank rate it was lending, and even in repo rate it is lending the money. But what is the difference between repo rate and bank rate? The main difference or the primary difference is these loans under repo rate are given against securities, and the commercial banks agree to purchase the same securities after some days by giving that amount which it has taken with along with interest. So loans which are given against securities, and the commercial banks have to buy back that securities, that is, they need to repurchase the securities along with the stated interest rate, and that is what is called as repo rate. So friends, here the main point of difference is under repo rate it is called as the repurchase rate. That is why it is repo rate is called as, other name is repurchase rate. Now once we have understood what is repo rate, now let us try to understand what is the difference between repo rate and bank rate. So there are very minute differences between repo rate and bank rate. So once you are clear with this, we'll go on for understanding what is reverse repo rate. So bank rate and repo rate. Friends, bank rate is taken only by scheduled commercial banks. Bank rate is not given for any other financial institutions but only to scheduled commercial banks, whereas repo rate, any financial institution, it can be non-banking financial companies, it can be life insurance companies, it can be anyone, they can take loans with RBI against repo rate. Under bank rate, no collaterals are required for taking loan. There is no collateral security needed. But when you speak about repo rate, the financial institutions need to keep collateral securities for taking the loan. So second point of difference is with regard to whether securities are needed or not needed. So under bank rate, no collateral securities are needed. For repo rate, collateral securities are needed. Bank rate is normally higher than repo rate. It is higher by 100 basis point. Exactly the opposite with regard to repo rate. The rate is lower than bank rate. So repo rate is 1% lower than bank rate. So the tenure of bank rate is up to 28 days, whereas with regard to repo rate, it is overnight, generally a day. So 28 days for bank rate and 1 or 2 days for repo rate. So bank rate is long term rate and repo rate is very short term rate. The next point of difference between bank rate and repo rate is bank rate decides the long term loan lending rates of the country, whereas repo rate decides the liquidity rates in the banking system. And lastly friends, bank rate is the basic for determining the penalties. So reverse repo rate, as the name suggests, is the opposite of the repo rate. So reverse repo rate is the rate at which the Reserve Bank of India borrows funds from the commercial banks in the country. In other words, it is the rate at which commercial banks in India park their excess money with Reserve Bank of India, usually for short term. So whenever the Reserve Bank of India feels that there is excess liquidity in the market, they take the money from the commercial banks, and that is what is called as reverse repo rate. The difference between repo rate and reverse repo rate is the income of Reserve Bank of India. So friends, this is all about bank rate, repo rate and reverse repo rate. So hope you understood the basic differences between all these terms. If there are any doubts, any queries or any comments or any feedback, please, you are most welcome to put it into the comment section. So once more, thank you everyone. Thanks a lot. Take care and enjoy. Stay happy and be happy. Bye bye.